Hey everybody, welcome back to another edition of 5 Question Friday. This is where I do my best to answer questions you all have sent in. If you want to send in a question, subscribe to the free newsletter. It goes out every Sunday morning. You'll see a link to it below the video, and you can just hit reply and send in your question. So with that, let's dive into the 5 questions using a slightly different app today to show you the questions. In fact, as I look at it, maybe I need to make it a little bigger. But here's what we're going to do. First, we're going to look at question 1 here. Can you contribute to both a Roth 401k and a Roth IRA? Can you, in fact, max them both out? Is that allowed? A viewer wants to know how comfortable I am linking accounts to apps. That's a question that's come up a lot lately, so covering that today. What are my thoughts on Boldin, which is a retirement planning software that we've talked a lot about that I use? They've got sort of a new way to set your rate of return assumptions that's kind of caused a bit of a kerfuffle. I think that's the right word, at least among some folks. A viewer wants to understand the mechanics of asset allocation and sub-asset classes and how do you sort of actually work that. I'll show you that. And then another viewer wanted to know my thoughts on Mark Zoril, who's part of Plan Vision, a financial advisor, versus just hiring Boldin's financial advisor. So I'll give you my thoughts there. And then going to end with a cool new tool that I found that's part of Monarch Money, which is a budgeting app that I've been using lately and really liking a lot. But they've got a cool tool to link it to your Amazon account, and I'll show you that at the end. And that's what we're going to do. These others I'll get to maybe in future weeks. But all right, number 1, can you contribute to a Roth 401k and a Roth IRA? This viewer named Robert is single filer, $120,000 a year. And want to know, hey, can I max out a Roth 401k, $23,500, and then another $7,000 to my Schwab Roth IRA? Or, can I only contribute one or maybe the other? And so it's a great question. And I think it can get a little confusing when we throw Roths into it. Because, we have sort of, I guess I'll say traditional 401ks, Roth 401ks, and then, of course, traditional IRAs and Roth IRAs. But here's the deal. You can contribute to a 401k and max it out. And assuming you qualify, you can contribute to an IRA and max it out each year. And when I say it is, you have to qualify. Of course, you'll have the 401k through your work, assuming you're working. So you should have presumably the earned income, because you have to have earned income to contribute to an IRA. Shouldn't be an issue, but it's a requirement. So you make sure you satisfy it. And then with a Roth IRA, you could make too much money to make a contribution. Now, you could do a backdoor Roth IRA. That's different. But to make direct contributions, I believe in 2025 for a single filer, it's your modified adjusted gross income can't exceed $150,000. I believe that's correct, but you'll want to check me on that. This viewer, $120,000, so they're good. So yeah, they should be able to max out their Roth 401k at work and a Roth IRA as well at Schwab or wherever you might keep your Roth IRA. Shouldn't be a problem. Should work. Great question. All right, number 2, Brett, thanks so much for what you do. Generally speaking, do you feel good about linking accounts and the various tools you recommend and use for your personal planning, example, Boldin, Rocket Money, etc.? And the short answer is I do. And I showed you in a recent video that when you link an account, and it doesn't matter really what tool, every time I've linked an account, this is how it's worked, whether it's a budgeting app like Rocket Money or Monarch Money, or say something like Empower, where you're going to track your investments, or you want to link your accounts to Boldin, Retirement Planner. When you actually go to enter your credentials, you're going to see a pop-up. And I showed you this, I think it was maybe last week. And the pop-up is going to be from your broker's website. I think I showed you, I don't remember which broker I showed you. It must have been Robinhood. So you'll see a pop-up. It's got a Robinhood URL. That's where you're entering your credentials. So the folks at Boldin or Rocket Money, they shouldn't have your logins to your credit card account or your bank account or investment account. Having said that, I still generally want to link my accounts as little as possible. I link them to get what I need, but want to limit that. And so for me, for budget accounts, and I've really been using Monarch Money. Again, I'll show you a feature in a minute. I really like it. Rocket Money, by the way, is great as well, and there are others that are good as well. But I don't really have any concerns with a credit card. For one thing, our liability is limited, and I'm seeing the transactions come through. I keep an eye on it. And really the same thing with my bank accounts. I've never had an issue. I guess it doesn't mean it couldn't happen. But again, the way these accounts get linked, it's not as if Monarch Money or Rocket Money have my login and they could log in and transact in my account. That's not how it works. So I've been very comfortable with that. I suppose where I get at least more cautious is with my investment accounts. And so I only link them where I must. Or where it's really beneficial. So for me, I don't link my investment accounts in Boldin because I just don't think it's necessary. It's not tracking my asset allocation. When you link your account, the only thing it's pulling in is your balance. And it's very easy. In fact, I can show you in Boldin. It's so easy to update your balances. This is a demo account. But if we looked at all the accounts, let me cancel out of this, hit this update balance and just lists all your accounts. Now you'd have to get the balance, whether it's from your statements that you get each month or you log in. But literally, boom, you just type in 6 different numbers and you've updated it. And that's the only really data that it needs from your accounts. So I just don't feel a need to link my accounts to a retirement planning tool like Boldin. The one place I would want to link it is where I want to aggregate all of my investments in one place. I want to see the balances. I want to see performance. I might want to see asset allocation. And so there, I think you can get away with just one. I test multiple apps, and when I test an app, I show you a demo version of it. Usually, I'll actually show you my Monarch Money app in a minute, but normally I show you a demo version. But I'll test the linking with my own accounts before I show you that, just to see if it's working and just the process. But you really only need one. I think Empower is probably the most popular. It's free, and if you've used it, the asset allocation tools are great. Performance that it shows you of your accounts is great. It can analyze your fees and the impact of those fees over time. It also ties into, I think, a decent retirement planner. It's not on the level of, say, Projection Lab or Boldin, but particularly for those 10 or more years out, and you're not at that point where you're trying to dive into specifically when you're going to take Social Security and how much Medicare is going to cost and Roth conversions. I think its retirement planner is quite good. There are others. I like Kubera a lot, Kubera. It is a paid tool, but it gives you your asset allocation. It's not as pretty as Empower, but in some ways it's simpler. It probably just comes down to preference. But you pick one if you want to have your accounts all in one place, and that's usually the only place I link my investment accounts. By the way, another option would be with your broker. Like at Fidelity, they have what's called Full View, but you can link all. If you say have an account at Schwab, but you also have accounts at 2 or 3 other brokers, you can link them all so that you can view them all in Schwab or at Vanguard or at Fidelity. And it's the same, by the way, it's the same technology that they're using to link all of these accounts so you can see them in one place. That these apps are using as well. There's industry standard, usually Plaid or Yodlee are the 2 companies that get used, I think, the most to actually the infrastructure behind all of this linking. So yeah, I'm very comfortable with it. I'm not here to tell you there's no risks, but I've never even heard of someone saying, hey, I linked my account to this app, a legitimate app we're talking here, and someone got access to my account. Maybe it's happened. If you've heard of that, leave a link or a comment below the video. I'd like to hear that, but I've yet to hear that. So I guess fingers crossed. So far, I haven't had an issue, and that's how I think about it for the different apps that I use. Okay, next question. Well, speaking of Boldin, I had a ton of emails on this. So this is sort of just one way that folks put it. What are my thoughts on Boldin's new way to set return rate assumptions? And here's the issue. If we go over to Boldin and we go back to accounts, I'll close this and we'll just open one up. Doesn't matter which one. When we talk about rate of return right here, the original way you set a rate of return was down here, optimistic, pessimistic. And so you put in an optimistic rate and a pessimistic rate. And then what Boldin did was, and we can see the link up here, you could then run your plan through using the optimistic rate you chose for each account. In this case over here, it would be 5%. Or you could use the pessimistic, in this case 2%. Or you could click average, and Boldin's kind enough, they do the math for us. So that'd be what, in this case 3.5% if my math brain is working. And and you could run the scenarios, right? And folks really like that. I like it. It's I think a good way to quickly see the effects that not just rate of returns on your investments would have, changes to that, but this also applies to your assumptions regarding inflation. And we can see that here, where we can do the same thing, set an optimistic and pessimistic inflation, general inflation, Social Security adjustments, and home appreciation, and so forth. What they've done is they've added some new features, and I personally like these features a lot, but I'll tell you what the issue is in a minute. They use historical data to set 5 possible rates of return. They label them as well: conservative, moderate, moderately aggressive, and aggressive, and they show you the rate of return. And so you can look at your portfolio for that account and say, okay, my asset allocation is whatever, the 70-30, that's, well, I'll just say that's moderately aggressive, and it's 8.8. Now, you could customize it down here and just pick a custom. So I don't want 8.8, I want 8.83, or whatever you want. But we'll just assume this is fine for us. If we look at it, what Boldin then does is they set an optimistic and pessimistic rate for you automatically, as I like to call it. How do they do that? They just add 20% to 8.8 and they subtract 20% from 8.8, and that gets you those two numbers. The other thing they tell you, they didn't disclose this before, they tell you the standard deviation. Now you say, why do I care about the standard deviation? Well, you may not care about it, but it would be, it's one factor that would be used when Boldin runs its Monte Carlo simulation. Yeah, so I think it's nice to know it, and this will change, by the way. Like if we went up to 10, the standard deviation is going to go up. Yeah, it jumps to 23. I know that might be small on the screen, but trust me, it's 23. And so I like this a lot. Now, what folks are concerned about, or some folks, is they really don't like the idea that of this going away, this original way to do it, where you set your own optimistic and pessimistic, and Boldin has indicated that this is going to be going away at some point. So I reached out to my contacts at Boldin, and what they said was, my question was this: are we going to, for the rates that we set this way, where we don't set the optimistic and pessimistic ourselves, but Boldin effectively sets it for us by adding 20% and subtracting 20%, is that still going to stay put? Is that going to be available going forward, even when this one down here, where you set the optimistic and pessimistic rates, if that goes away, but with the new way to do it, will you still have this automatically calculated optimistic and pessimistic such that we can continue to use optimistic, average, and pessimistic? We would have some control over these numbers, right? Because we would have control over which of these we picked, and presumably could still even just set a custom rate. Let's say we wanted, 7.25, and it automatically updates optimistic and pessimistic. So in that sense, we have some control over it. I guess it's not complete control, right? Because it's plus or minus 20%. What if we wanted 7.25, but we wanted it plus or minus 25%? That wouldn't be available. But I wanted to know, is this, though, at least going to be available? Because to my way of thinking, this would be great. I'd be perfectly fine with that. I don't need to be able to customize it down to some level where I want it plus or minus 23.47% or something. Some people might. I just don't feel that that's necessary. But I do like this idea. So they got back to me, and what I understand is that final decision hasn't been made. But they asked me my opinion, and I said, I'll tell you what I told them. In fact, I just sent this email to them right before I recorded this video. I said, I think this is important to keep. And here's why. If this goes away, pessimistic and optimistic, you can still test different rates of return and different inflation rates. You would have to create new scenarios, right? You have to come down here to the scenario manager down here, and we'd add a new scenario. We'd base it on let's say we'd base it on the baseline. We'll call it the pessimistic scenario. I don't know if I spelled pessimistic or scenario correctly, right? So we could do that, and we should be, yeah. So we're in pessimistic, and I could go into accounts, and I could set pessimistic rates using whatever. I could actually use the pre-programmed ones, if you will. I could do a custom, right? But that gets problematic in my mind because you have a baseline plan. So now you're going to have two scenarios, one for optimistic, one for pessimistic. And then what if you build a new plan, new scenario, say to test Roth conversions off your baseline, you set that all up and you think, well, wait a minute, I've got to have two more plans for the Roth conversion scenario, one pessimistic, one optimistic. And then you test different retirement ages and you test different Social Security claiming strategies. You've got to start creating these pessimistic and optimistic scenarios for each of them. And that gets pretty convoluted. And then what happens then? You've got all that set up, whatever, and then you change something in your baseline plan unrelated to rates. Now you've got to make that same change through all these scenarios if you're going to match it up. I think the pessimistic and optimistic feature is a nice one. I would personally not want to see it go away. Again, I don't so much care that I can set it myself. I think plus or minus 20% is good. That's my view. You may disagree, but having said all of that, I don't have a clue what it takes behind the scenes in terms of engineering and software development to make all this happen. So it may be much more difficult than I can appreciate. But that's my take. I'd love to hear your take, so please leave a comment below the video. Let me know what you think. All right. The next question, by the way, with this new app, I can tick these off and they disappear. Gives me a feeling of, making progress. All right. Okay. How do the mechanics of 70-30 portfolio work? And this was from a viewer named Michael. Here was his question. In a 70-30 portfolio, for example, if I want 20% in international stocks, do I base the 20% on the total portfolio or just the equity portion? It's a great question. And this one used to stump me. At the end of the day, I suppose you could do whatever you wanted. It's just that the results will be very different, right? If we base the 20%, whoops, let me show you the question. Sorry, here we go. I need more coffee. If we apply the 20%, of course, to the whole portfolio, then we'd have 20%. On a $100,000 portfolio, we'd have 20,000 in international stocks. If we took 20% of 70, then of course that's 14, so we'd have $14,000 in international stocks. So one way to answer this question is, well, what do you want? Do you want 14,000 in international stocks out of 100, or do you want 20? I will tell you the way I think of this is that I multiply the 20% against 100. It's the whole portfolio. 30% goes to bonds, 70% goes to stocks, and in this case, 20 of that 70. So and it gets confusing. It'd be 20% of the 100, I guess, would go to international, and then 50% of the whole portfolio would go to, let's say, U.S. stocks. That's how I think about it. Again, when you're reading a book or an article, you have to just figure out from the context of what you're reading, how the author is thinking about it. Because sometimes they'll carve out, say, the equities and say, okay, of all the equities, we want 30% to go to whatever and so on. And you can tell just from the context that they mean 30% of whatever dollar amount they've allocated to equities. But when I think of a portfolio like a 70-30 or an 80-20, for each percentage, I'm multiplying that against 100. That's how I think about it for my portfolio. But it's a good question. I remember trying to noodle through this many years ago when I was reading different books about asset allocation. All right. Number 5, what are my thoughts on Mark Zoril versus Boldin financial advisors? That's a great question. So let me just show you these. Mark is part of Plan Vision. Let me show you his website. And I've mentioned him before. So here's his website. He's a very inexpensive financial advisor. He has a team. He's been on the show. I have no financial, so just to be clear, I have no financial relationship whatever with Plan Vision. With Boldin, their software, I'm an affiliate, so you click a link to Boldin and you subscribe to it. I get a small fee. But in terms of their financial advisors, I have no financial relationship. I don't get any money for referring someone to Boldin advisors at all. So no financial relationship there, none with Plan Vision. I met Mark online and interviewed him as part of Dough Roller, my podcast from many years ago. Goodness, I'm going to say a decade ago. Then he was known as the $96 a year financial plan. That's what he charged you. And everything was done over the phone. And so I hired him, and we kind of went through some planning. I don't recall that it was exhaustive. And I had him on the show. I really like Mark. I think he's great. I still pay his fee he and I maybe talk once a year. He doesn't do a financial plan for me, although he would if I, asked for it. I do tend to have him or his team answer some questions from time to time. The most recent one last year was they did a Roth conversion analysis for me, where I asked them, does it ever make sense to just convert the whole thing all at one time? I call it a max, max the Roth conversion, just rip the Band-Aid off. And they did some interesting analysis. Maybe I'll do a separate video on that. But I like Mark and PlanVision a lot. I forget the price now. The viewer said $400. I don't know if that's correct, but it's very inexpensive. And so that's one option for you. And now Boldin is different. I have never used their financial advisors, so I don't have a frame of reference for this. I can tell you they're a bit more expensive. They're $2,500, a flat fee for retirement plan checkup. I will tell you that as financial planners go, $2,500 is within the realm of reasonableness to do a retirement plan checkup because there's a lot of work involved. I suspect you'd consider working with them if you use Boldin. I don't know if they work with folks that don't use Boldin. I wouldn't think they do, but I don't actually know that. So that's a question. So at the end of the day, they offer sort of they call it a free discovery session. So you could certainly try that and get a sense of what they have to offer, and if you think it's for you. Mark, again, it's going to be less expensive, and maybe we can quickly. Here we go. Yeah, okay. Our new price for U.S.-based clients is $389 for the first year. After that, it's $8 a month. Isn't that crazy? That's what I pay now, $8 a month. So I mean that's really inexpensive as well, and so I think they're both reasonable options. Like I said, you could reach out to both of them and get a feel for what you think is best. Maybe you could share a little bit about what your specific questions are and concerns and your situation, and get a sense as to hey, can you handle this? Does this work for you? I will tell you that PlanVision uses eMoney as their planning software. Obviously, Boldin, I think it's going to use Boldin. I mean, they're both good products. I've used both. I've used eMoney through Mark. Also, it's what powers Fidelity's Full View. I will tell you I prefer Boldin between the two, but eMoney is perfectly good retirement planning software, so no issues there. So that's my take. If you do use them, I would love to hear about it. I mean, not the details, of course, but send me an email. I'd like to know if whether you used Mark or the folks at Boldin and how it went. I mean, again, not details, but were you happy, satisfied, not? Were there any issues? What did you like? What could be better? If you feel like doing that, that'd be great. All right. Now we're on to the bonus question. Here we go. So I'll explain what this is in a minute. So here's the deal. Let me pull this up for you so you can see it. Well, here's the first thing. So Monarch Money is a budgeting app. I've used it on and off for about a year. I've started using it extensively in the last few months. I got to say it's probably my favorite. I mean, there's a lot of budgeting apps I like. There's a lot I'm not a fan of. But this one, I really like Monarch. It's probably the most feature-rich. It's hard to think. I can't think of a budgeting app that does more than Monarch, but maybe it's out there. But I just came across this, and it's a Chrome extension that allows you to connect your Amazon account to Monarch Money. And you say, well, why in the world would I want to do that? Here's the issue with Amazon. We buy a lot from Amazon. We use the subscribe and save, and so a lot of transactions. And I use it a lot for my business. If I'm going to buy a book that I'm going to read, related to my business or equipment. And when it comes to a budgeting app, it just says Amazon. And they tend to automatically categorize it as shopping or something. Not very useful. And I never take the time to open up my Amazon account, match every order over to the budgeting app, and correctly categorize it. So this Chrome extension does it for you. All right. And I tested it. Let me show you what it looks like. And this is my actual Monarch account. So I'm looking at it to make sure, there's no personal data. So here it is. So you can see all the Amazon purchases. This was one that they linked. They categorized it as fitness. And I was thinking, fitness? What did I buy this fitness? But then they put in the notes the description. So I guess they must connect to an Amazon API to get this data. This happens to be some BCAA powder, like pre-workout powder. It's supposed to build lean muscle. I'm not sure it works. That's a whole other story. So I looked at, so I get a quick look at it. Now in this case, I might not leave it as fitness. I might move it over to like a health and welfare kind of category, or maybe even groceries. But it's very quick, easy. I don't have to go over and log into my Amazon account, and it just works. And I've tested it on a number of different transactions. The auto categorization feature, it's not always perfect, but it's really good. And I really like it. So I thought that is terrific. So I wanted to mention that. I'll leave a link to Monarch Money below the video. And I guess that's it for today. So again, if you want to send in a question, subscribe to the newsletter with a link below the video. It's free. It goes out every Sunday morning. And then when you get it, just hit reply. I am reading all of them. I'm working through them as quickly as I can. I've got hundreds of questions. I try to answer questions that I think might have the broadest applicability or have some sense of urgency to them, whatever it might be. But I do my best, and I would love to hear from you. So there you go. As always, if you have questions, leave them in the comments below. Be happy to help you out any way I can. And until next time, remember, the best thing money can buy is financial freedom.